Hello A plus traders, welcome back to our YouTube channel. Today we are going to learn how to draw a good support and resistance. We're also going to learn how to confirm a broken support and resistance. Finally, we are going to be learning what you can look out for, or what should you look out for when prices start support and resistance. But before we get right into it, my name is Anibitasan, and if you are not yet subscribed to this channel, do that right now and click the notification icon so that you won't miss our next video. Support and resistance are key turning points where forces of sellers and buyers meet. So these are price levels where traders tends to buy and sell from. You buy low and you sell higher. So support and resistance gives you a kind of guide on where you should buy and where you should sell from. So when drawing a support and resistance, you don't have to draw too many levels. Because if you draw too many levels, your chart will be cloudy. You will not be able to see what price is really doing. Also, when drawing your support and resistance, draw them on the higher time frames like the daily, the weekly, or the monthly time frames, because on the higher time frames, the support and resistance tends to be very concrete. Price tends to respect the support and resistance on the higher time frame, whereas the support and resistance on the lower time frame are like clutches to the market. For example, if you are drying and you approach a speed bump, you march on your brakes, and you slow down. Once you roll over the speed bump, you now continue moving. So the support and resistance on the lower time frames, like the 4-hour and the 1-hour, are like speed bumps to the price. So they just slow down and continue. But the support and resistance on the higher time frames are more concrete. Price tends to reverse from that point. Now, include many touches as possible when you are drawing your support and resistance. At least let your support or resistance levels have 3 touches, at least 3 touches. Then also give a minimum of 200 pips between each levels. Don't let them be too close. Like you draw your support and resistance every 50 pips. No, that's too close. Like, let it have some room to run. So 200 pips, it's okay. Then see your support and resistance as zones, not price levels, because we tend to have overshoots of price. Sometimes you see price get to a support and spikes down, then reverse immediately. But if you treated it as a zone, you will realize that okay, it's not yet broken. And also focus on the key levels. I've said this earlier, focus on the key levels, focus on the support and resistance on the daily, weekly time frame. These are 3 possible scenarios you will see when price is at support. The first one is that this is your support line here. The brown horizontal line is our support here. This is the first scenario you will see. You may see price coming down on a bearish trend and approaches your support. Now when price is at support, you don't just start buying from there. You have to wait. Look for price actions, what price is doing. For example, you can be looking for the bullish reversal candlestick formations from there. You can also be looking for bullish chart patterns from there. What I mean by bullish chart pattern from this, like maybe the descending wedge. So you look for bullish candlestick formations from there. Now when you see these candlestick formations from here on the support zone, when you see them, for example, let's say you see a bullish pin bar, or you see a hammer or a bullish engulfing candle. Once that particular candle closes and you see the formation and it's very clear, you buy above here and you let your stop loss be few pips away the support zone. For example, this is your support here. This is your support here. So your stop loss will be a little bit away from there. But you have to give price the room. And to avoid spikes, you can place your stop loss here. Here is your stop loss. Here is your stop loss. And here is your entry here. After you have seen your reversal candlestick, bullish reversal candlestick formation or chart patterns, bullish chart patterns, then your TP will be above here. This will be your TP. So this is the first scenario of what price may likely do when price reaches a support zone. Now the second one is that once price comes and closes below your support, you don't need to start buying from here, because you can never tell what price is going to do yet next. But you need to be patient and wait for price to close above the support again and retest. Once price retests this support line again, this is where you start looking for your bullish candlestick formations or the bullish reversal chart patterns. When you see them from this support zone now, that is when you buy. You don't buy from here, you buy from here. That is when you buy. So you buy from here and place your stop few pips away from the support zone. This will be your stop loss and your entry will be above here. This will be your entry here and your TP up above here. The TP will be here. So this is the second scenario you may see price do when it reaches support. The last one is price breaking the support. How do you confirm when price have broke support? This is the third scenario of what price may do here. So price heads down, closes below the support level, retests the support level. Price has to retest the support level. So once price retests the support level, you should be looking out for bearish candlesticks formation from there, and you should also be looking at bearish chart patterns forming from there. So when you see all this, you now take a sell, placing your stop loss few pips above the support, and your take profit will be below here, will be below the support zone. That is the three possible scenarios you will see price do when price reaches support. One is that it might reverse immediately. Two is that it might close below and reverse within few hours back into the region of support. Three is that it might break below support and keep selling down and keep trending down. Forex trading is all about entries and exits. You don't have to forget this. If you are not able to define your entries and exits, it's going to be hard for you to trade Forex. That is why in the Pro Trader course, this is what I teach and discuss with my students. How to enter a trade and how to exit a trade using a good risk to reward ratio. So if you are interested in joining the course, you can just click on the link below this video and chat me up on WhatsApp. Now let's look at the scenarios for resistance. So these are also possible scenarios when price gets to your resistance zone. This is your resistance here. This is the resistance here. So price can be trending up on a buy. Once it reaches your resistance, what you should be looking out for here is bearish candlestick formations and impulse from the resistance. Once you get this impulse from the resistance, you take a sell, placing your stop few pips away from the resistance. This is where your stops will be, your stop loss, and your target will be down here. The second scenario is that price can trend up, closes above the resistance within few hours, comes back and close below the resistance. And once it does this, you don't have to sell from here. Rather, you sell from where we have this green circle here. So from here, you don't just jump in and start selling. Oh, price is retesting the resistance. You don't jump in and start selling. You have to wait to see bearish impulses from there, or some bearish candlestick formation from there. Once you see that, you start selling, placing your stop loss few pips above the resistance and your take profits below this way. So the third scenario also is price breaking the resistance and continuing the uptrend. Price may come up, close above resistance, retest the resistance and continue trending higher. So once you see this kind of scenario, you don't need to sell again, because price have broken your resistance. By price retesting this resistance again, it has confirmed that price have successfully broken the resistance. From here, you start looking for bullish candlestick formations and bullish impulses from the resistance level. Once you get that, you take a buy above here, and your stop loss will be few pips below the resistance, and your take profit will be above here. So that is how you confirm when price have broken either your support or your resistance levels. And these are what you look out for when price have reached your support and resistance zone. So in the Pro Trader course, we explain in-depthly on how you can enter a trade and also how you can exit a trade. There are so many ways you can use to enter a trade and how you can exit the trade, and this is what we discuss in the Pro Traders course. So if you are interested in the Pro Traders course, just click the link below this video and chat me up on WhatsApp. So that is what we cover in this video tutorial. Don't forget to subscribe to this channel and hit the notification bell. Also, if you learned a thing or two from this video, like this video. If you have further questions, just comment on this video and I will come give you more explanations and examples, set examples. Thank you for your time.